Welcome to the exciting world of trading. Imagine being able to read the market's secret language. Today, we start with candlesticks, the heartbeat of every price chart. These simple shapes unlock stories about buyers, sellers, and market moves. Ready to become a market detective? Let's dive in. Think of yourself as a detective, solving the mystery of price movements. Candlesticks are your clues. Each candle tells a story about what happened during a set time, like who was stronger, buyers or sellers, and how prices moved. They help you predict what might happen next. It's like reading the market's mind. Did you know candlesticks were invented over 200 years ago? Japanese rice traders used them to understand supply and demand in their markets. They tracked every price move with these candles, making smarter decisions every day. Today, traders worldwide still use these same timeless tools. So what exactly is a candlestick? It's a special shape on your chart showing four important prices: the open, close, high, and low for a specific time period. The wide part, called the body, shows where prices started and ended. The thin lines, called wicks or shadows, show how far prices moved up or down. Candlesticks come in different colors to show who won the battle, buyers or sellers. A green candle means buyers pushed prices higher, celebrating a victory. A red candle means sellers took control, pushing prices down. But remember, every candle is just one moment in the exciting dance of the market. Let's break down a green candle, the color of winning buyers. The bottom of the body is called the open price, where the market started. The top of the body is the close price, where it ended. The body shows the price journey in that time. Now let's break down a red candle, the seller's signature. It opens high and closes low, showing a fall in price. The top is the open, bottom is the close. This candle screams selling pressure. See those thin lines sticking out of the candle? Those are the wicks, or shadows. They show the highest and lowest prices reached during the time, beyond just the open and close. The top of the upper wick is the high, the max buyers paid. The bottom of the lower wick is the low, the least sellers accepted. This range tells us how wild the market was. Here's the magic. These candles appear on all time frames: 1 minute, 5 minutes, 1 hour, 1 day, even 1 month. Each candle represents price in that chunk of time. Imagine a 1-hour candle. Now zoom in to 5-minute candles. You'll see 12 smaller candles forming that one. Different time frames equals different views of the same moment. Candles line up one by one to form the chart. Each new candle is born after the last closes. Together, they build the market's story, moment by moment. Every candlestick has a unique shape, and each one tells a different story. Some scream power, some whisper hesitation. Learning to recognize these candles is like reading emotions on a chart. Meet the Marubozu, a candle with no wicks, just a full body. It shows pure strength. Either buyers or sellers took over completely, without any fight. The spinning top has a small body and long wicks, showing the market was undecided. A tug of war between buyers and sellers, but no one clearly won. The Doji is a tiny body candle where price opened and closed almost at the same level. It means the market paused, unsure of where to go next. A long-legged doji has huge wicks above and below, meaning the market was volatile but closed right where it started. Pure confusion. The dragonfly doji looks like a T. It opens high, drops low, then closes right back at the top. Buyers made a strong comeback. The gravestone doji is the opposite, shaped like an upside-down T. Buyers pushed price up, but sellers smashed it back down before close. The hammer has a tiny body and a long lower wick. Sellers tried to crash the price, but buyers fought back and slammed it back up. A potential reversal candle. The inverted hammer flips the shape: long upper wick, small body at the bottom. It shows buyers tried, but couldn't fully win. Still, it's a shift in momentum. The shooting star looks like a falling price rocket. Long upper wick, small body. It shows buyers pushed price high, but sellers took back control fast. The hanging man looks like a hammer but comes after a strong uptrend. It shows that sellers are starting to wake up, a warning sign. Some candles show pure chaos, huge wicks, tiny bodies, wild movement. These candles tell us the market is emotional, unstable, and reacting fast. A candle with a big bold body shows confidence. It's like the market is saying, I know exactly where I'm going. Buyers or sellers are leading strong. Tiny-bodied candles with long wicks show hesitation. The market is unsure. These often appear before big moves, as the calm before the storm. Every candle tells an emotional story: fear, greed, doubt, or excitement. Candles are the heartbeat of trader psychology. When price jumps up and closes strong, that's greed. When it drops and closes low, that's fear. You're reading real-time human behavior. Let's quickly refresh what you've learned. Here are the stars of the show: hammer, doji, Marubozu, and more. Lock them in your memory. One candle tells a quick story, but what happens when 2 or 3 candles appear side by side? It's like combining characters in a movie: new meaning, new power. That's how we get candlestick patterns, but don't worry, we'll cover that in the next class. For now, keep mastering the solo heroes. Every candle shows what happened during a certain time, like 1 minute, 5 minutes, or even a whole day. Changing the time frame is like looking at the market through a different lens. One moment can look completely different when you switch. That's why timeframes matter so much. A candle that looks weak on the 1-minute chart might look powerful on the 15-minute chart. The same candle, but a different story. That's why smart traders don't trust just one view. They always check multiple timeframes before making a move. Each candle is a sentence. Put them together, and they form a story about buyers and sellers fighting for control. Learn to read that story, and the market starts making sense. It's like reading a secret message hidden in the chart. Think of candles as characters talking to each other. One says, buyers are strong. The next says, nope, sellers are back. Each candle responds to the last. That's why watching them together gives you insight into what could happen next. The market has moods: excited, nervous, confident, scared. Candles show those moods with their size, color, and shape. A big green candle? Excitement. A small, confused one? Uncertainty. Start watching for these emotions. Just because a candle looks strong doesn't mean you should jump in. One candle doesn't tell the whole story. Smart traders wait, they look for confirmation. Be patient, the best trades wait for you. Candles don't predict the future, but they do leave clues. Like a detective, you look at what just happened, and make your best guess. The more candles you see, the better you become at spotting the next move. Look at how far you've come: doji, hammer, Marubozu, spinning top, you've met them all. These aren't just shapes anymore, you understand their meaning. Most people never get this far. But you did. That's legendary. Next up, we're stepping into the world of candlestick patterns: morning star, 3 white soldiers, bullish engulfing, bearish engulfing, piercing line, and a bunch more that quietly hint at what the market might do next. And somewhere along the way, if you've made it this far, it probably means you're the kind of person who notices details most people skip over. So thank you for being here, and I'll see you in the next video where things start getting really exciting.